I'm Eric Gagnon.
And I'm Robin Gagnon, and we sell restaurants. We started the nation's largest restaurant brokerage firm, We Sell Restaurants, over a decade ago. You can find us online at WeSellRestaurants.com.
We hit the airwaves once a week with expert guests talking about the topics that are trending in the restaurant business. Feel free to tweet your own questions on a topic while we are on the air to twitter.com/sellrestaurants or post on our Facebook page at facebook.com/WeSellRestaurants. If we don't get to your question, we'll follow up with you on social media later on.
Our goal is to satisfy your appetite for acquisition, feed the need for restaurant reality, and serve up a recipe for business success. We bring on board the best and brightest in the restaurant industry to talk shop and share the inside scoop.
And today's topic is financing a restaurant purchase. Very hot topic. We all know that it's very difficult to get money for restaurants, whether it's an acquisition, whether it's a new purchase, or buying something from the start from the ground up. So we have three great guests today that's going to help us give us some options and different things that are happening in the marketplace that can help you as a restaurant or future restaurateur. Robin, who's our first guest today?
David Nilssen is the CEO and co-founder of Guidant Financial. David co-founded Guidant Financial in 2003 and has been a featured speaker at over 350 national and international events covering topics from entrepreneurship to small business financing. In addition, he and his company have been highlighted in such major media sources as CNBC, Fortune Magazine, Entrepreneur, CNN, and the Wall Street Journal. In 2007, the Small Business Administration named Nilssen the National Young Entrepreneur of the Year, and the Puget Sound Business Journal named him one of the top 40 business people under 40 years of age. Quite impressive. In both 2008 and 2009, Ernst & Young named him a finalist for their coveted Entrepreneur of the Year award, and in 2011, David released a book called Making the Jump into Small Business Ownership and was named one of the top small business influencers. He is also a past president of the Seattle Entrepreneurs Organization. Second on board, Eric, who's joining us?
Our second guest today is Sylvia Shiverdecker, Vice President of Business Services at BB&T Bank. Sylvia has been in business banking lender for over 15 years. She started her career in Birmingham, Alabama with South Trust Bank as a small business lender. South Trust Bank was purchased by Wachovia Bank and then by Wells Fargo. She left Wells Fargo in June of 2010 and joined BB&T Bank as a business services officer. As a business service officer at BB&T Bank, works with business owners to help them obtain the capital they need to operate and grow. She also offers cash management and deposit services to help business owners manage their day-to-day cash flow of their businesses.
Our third guest is Alex Sheshunoff, founder of Foodstart.com. Foodstart.com is a crowdfunding platform just for independent restaurants, food trucks, cafes, and others in the food and beverage industry. Let's go ahead and kick this off.
David, welcome to the show. Everybody, warm welcome to you. Appreciate you guys with us today. And David, I'd like to start with you and ask you a question about, can you tell us about, we hear a lot about this 401k rollover and how we can use our 401k for money. Can you elaborate a little bit on that and tell us how this works?
You bet. And thanks for having me on the show today. One of the fastest growing segments in franchise and small business financing today is the concept of what they call rollovers for business startups. And this is a process by which an individual can use up to 100% of their retirement assets to invest in a small business without taking a taxable distribution or getting a loan. And the simple way that it works is most people have an IRA or a 401k. And the way that those are traditionally invested is in stocks, bonds, and mutual funds. And instead, using our self-directed 401k, individuals are able to invest in stock of their own business. So the way that the process works is an individual who is, say, starting a restaurant could take the money that is in their retirement plan and invest that in the stock of their new business. So the money moves from the 401k plan into this business and now can be used for necessary and ordinary business expenses. And the 401k becomes a shareholder in the business.
This just sounds amazing because, everyone hears, oh, don't touch your 401k. You're going to be levied with all kinds of taxes and penalties, and the worst guy in the world, the IRS, is coming after you for your firstborn child. But you're telling us that's not the case.
Well, a lot of people, when they go to start a business, don't recognize that they can actually invest as opposed to taking that money out. They can actually invest it in the business. So making an investment in a qualified business is not a taxable event. But unfortunately, what most people end up doing is taking a distribution. So they're subject to the early withdrawal penalties if those apply because of their age, plus ordinary income taxes. And so the taxes in that event can be very significant.
Wow. David, I don't want to be, I'm going to play devil's advocate here a little bit and ask you, because I've heard a lot of lawyers and different people in the industry saying, this is illegal and this is breaking the law. What can you tell us about that would make people feel comfortable about this from a legal perspective?
Yeah, I mean, there's explicit exemptions in both tax and ERISA law that were put into those documents specifically to encourage investment in small business. And the term is called qualified employer securities. So the tax laws and the ERISA itself was written with these explicit exemptions in there to encourage the investments themselves. Now, I'll go back, and I think the real challenge that we find with advisors is one of two issues. One is there's a lack of knowledge. In order to get your CPA designation or to become an attorney, even within tax, it's not qualified to become an expert in these areas in order for them to get those designations or licenses. So it's not uncommon that we are educating CPAs and tax professionals on these rules and regulations and how this process works. The second is simply that we often run into financial advisors who want to keep those assets under management and who have a more paternalistic view on retirement. The reality is anytime somebody goes to buy a business or wants to start a restaurant, there's going to be risk. And whether you choose to go down the more traditional lending route and take somebody else's money and collateralize other assets of your own and your credit, or whether you want to underwrite the transaction your own using your retirement assets, there is risk. So I think, unfortunately, a lot of people think about the retirement assets as this thing that sits on a shelf and you don't touch it for the next 30 or 40 years and then eventually will retire. But the reality is it can be used in a way that can actually accelerate wealth if you're confident in your ability to lead and grow a business.
Awesome. Very good clarification. I appreciate that. And if you give us a couple of seconds, we're going to turn now to Sylvia Shiverdecker with BB&T. And Sylvia, Robin has a couple questions to ask you.
Let's talk about more traditional lending. The first question that any buyer always asks me as a restaurant broker is, how much money do I have to put down? So tell us, what type of down payment's typically required when you're doing an SBA loan for a restaurant?
Typically, we're looking at 20 to 25% cash injection from the person that's looking at purchasing this.
Oh, so that's not so much. That's a lot of leverage for a buyer.
It is. If we go SBA route, there are some great programs with the SBA that would allow you to do that.
Okay, so give us kind of a generalized idea of what an SBA loan looks like.
Okay, well, SBA loans, typically we're looking at the cash flow in existing businesses. So we do need to make sure that the trends in a restaurant are trending the right way. Sales are going up, the business is making money. But if we can show that the trend is good and that the buyer has some experience in the restaurant industry or has some experience in running a business or also with some bookkeeping or has somebody at their disposal that has that experience, then and it's a successful business that they're purchasing, we can usually go about 10 years on an acquisition with, again, 20 to 25% down, as long as the business cash flows and the buyer has good credit.
Excellent.
Good. So, but tell me a little bit, because you hear stories out there, and first of all, they said the SBA, the SBA is making me a loan. Well, there's no such thing, correct? I mean, the SBA does not make you a loan. Is that correct?
That is correct. The SBA doesn't loan directly to a borrower. You would need to go to a banking institution or other SBA funding sources in order to get an SBA loan.
So, take a couple of seconds here to explain to people what is the SBA role into this transaction so our listeners can understand better that part.
Sure. What the SBA really is doing is taking some risk out of the banking industry. They're basically giving a 50% guarantee if all else fails and we cannot get repayment on the loan. We do ask that borrowers personally guarantee the loan as well. So first, if the business fails, then we would go after the individual for the shortfall, but the SBA would also cover a 50% of the shortfall. And that gives us some comfort because typically when you're buying a restaurant, you're not buying strictly assets. So hard assets, you're buying cash flow. So there's typically a shortfall in collateral.
That is such great information. Tell us a little bit about if you were underwriting a loan for someone, an SBA loan, what kind of things would you need?
We would typically need about 3 years worth of financial statements, tax returns, and a balance sheet and income statement from the seller of the restaurant. We also need 3 years worth of tax returns from the individuals that are looking at buying the restaurant. And then we need a personal financial statement and a business plan, and also some projections on cash flow. And most of that can be found at sba.gov. Is a good website to help you to get a free business plan, and it also help you to look at projections and how to perform those.
Good. That's very good information. And for the listeners out there that are, our clients or potential customers of We Sell Restaurants, please do not give us a call anymore and say, I got a loan from the SBA. So now that you know the story on that, please. Thank you so much, Sylvia.
So the newest kid on the block when it comes to financing a restaurant is what's known as crowdfunding. Our next guest, Alex, has a company called Food Start. Alex, first of all, explain for the newbies in the audience, what is crowdfunding?
Well, happy to talk about that. First, I want to thank you for having me on the show, Robin. Really appreciate it. Crowdfunding is just a way for business owners to raise capital in small increments from their from the crowd, from friends, family, and future customers. When it comes to restaurants, most restaurant owners are gathering capital from a basket of sources, and David helps people invest their own retirement savings. Sylvia is obviously with the bank, and we help harness the sort of capital of again friends, family, and future customers, and anybody else who wants to see the business succeed. It's not a new idea. The Green Bay Packers, I think, in 1923, issued basically shares or memberships in the Packers, and people didn't get a cash return for their investments. What they got was were sort of discounts and preferred entrance and free merchandise. But as a result, they raised capital and they created the most loyal fans in football. We do the same just with independent restaurants and food trucks and other food-related businesses. So it's not a loan. It's you're not paying interest back. What you're doing is you're giving. In our case, we're facilitating a transaction where people are putting in capital with small amounts, say $500 or $1,000 or even $50. And what the restaurant owner is promising in return is to make them feel like they're an owner. So they're getting a free dessert every time they come in, or behind the scenes tour, or a guaranteed table during busy times. But it's a low cost way of raising capital effectively.
So tell us an average restaurant out on the street that wants to try crowdfunding. What would they do? What are the steps they would go through?
Well, I happen to think they should come to foodstart.com and they would just post their campaign or their project on our site. So they would just describe how much money they would want to raise. Say, it might be a small amount, it might be $30,000, but it would be enough that they could then use it to help meet Sylvia's cash injection requirement, and they would then describe how they're going to use the money. They might be for an expansion, or it might be for a new kitchen, or whatever it is. They would describe their business, and then they would describe what people are going to get in return, what the perks and rewards are. I should say it's not an equity position that they're taking. They're not getting a percentage of your company.
Alex, would that be then more for a seasoned operator, a seasoned restaurant has got a background of people and things like that versus a startup?
It works for both. We work with about half our clients are startups, and about half are already operating businesses. I should say it doesn't work quite as well for franchises. People often don't want to just to brag to their friends that they are an early backer of local RBs or something. It's more for, again, independent operators, but we work with both.
So we've heard from all three guests right now, and every time someone speaks, it makes me think of something else I want to ask. So let's jump back to David for a second and follow up with the same sort of question we asked Sylvia. David, what does a client need to assemble to sit down, and kind of what's the process time frame for going into a 401k rollover?
Yeah, it's actually pretty simple. I mean, the reality is these are retirement plans that fall under what they call the self-directed retirement industry. And so from that standpoint, what that means is the individual gets to make, the quote-unquote underwriting decision. So from the standpoint of their retirement assets, they get to decide whether they believe this is the best investment for them. So if they choose to invest their retirement assets in the business that they're about to acquire or the business that they'd like to recapitalize, then by engaging our services, they can actually be funded in as little as 3 weeks. So it's a relatively simple process for them to do that. Now, the process requires that they set up their operating entity if they don't have that already, and then facilitate the rollover from wherever the retirement assets are currently held into this new 401k plan, which will in turn then invest in the business.
The timeline of this, then, from the time somebody contacts you to the time they get their funds, what are we talking about typically on the average?
Yeah, 92% of the deals that we are affiliated with get done in 3 weeks or less, 21 days. So it's a very, very fast process. Now, the one caveat I will say is that about 30% of our clients are actually using this in combination with debt financing. So one thing that we haven't talked about is the fact that, Sylvia talked about earlier how the kind of more traditional terms of funding, especially with the SBA, you're looking at about 20-25% down payment. Well, there are a tremendous amount of people out there that are they have a lot of equity, but not necessarily a lot of cash, and a lot of that cash is sitting in things like their retirement plans. You can actually use the rollover for business startup as the equity injection for a small business loan. So the combination of the two are often being utilized in order for an individual to buy the business that they want. Those can be a little bit longer.
Okay, so now we understand sort of the timing of the services for a 401k rollover and the Guidant Financial. Sylvia, what's the timing for an SBA loan? What would we be looking at if someone finds that ideal restaurant, they're ready to buy it today? How long is it going to take them to get funded if everything is wrapped up and ready to go?
Well, it usually takes us about 2 weeks to underwrite the loan. And then after that, we go to the SBA, and we're a preferred lender, so we basically order the docs. In order to get the docs, we have to have a business evaluation. So we typically go to an outside firm for that, and it takes about 2 weeks to turn that around. And then it depends on if they have the 20 to 25% coming in, and the business evaluation goes fine, you're looking from start to finish about 30 to 45 days.
I have to disclose that we have worked with Sylvia on loans, and she's 100% on target. But she is, I have to say, one of the fastest SBA lenders we've ever encountered. So that timeline may be a little longer depending on who you're working with. But that's great information. Now, Alex, tell us the same thing relative to foodstart.com. What's the average time of a campaign? How long does it run, and how long will it take for someone to actually be funded?
Well, the average time is about 60 days. The project owner or the business owner can set their own deadline. So in some cases they could set it, they could set it for 2 weeks or up to 90 days is the max. But 60 days we're finding is about the right amount of time. It becomes a little bit of a game for people where they can say, well, we only have 1 week left and we're just $2,500 short. Help us reach our goal. And so a longer campaign doesn't necessarily produce more capital.
Now, let me ask you this, thinking outside the box. Sylvia has a customer that's got 19% of the loan, and she needs 20%. Now, Alex, you're telling me you could raise that extra $5,000, $10,000 for a customer, and they could use that towards their down payment that he would be required for the purchase through an SBA loan. Is that correct?
Yeah, no, that's exactly right.
Okay. So, now, Sylvia, would you approve that?
Well, as long as the cash flow is really good, again, we're looking at typically a 125, a 135 debt service coverage at minimum. And basically, it's very easy to calculate that. We're looking at an EBITDA number, which is earnings before interest, depreciation, amortization, and taxes. So we'll take that figure and then divide it by what your debt service is going to be. So again, if we're looking at a $350,000 note amortized over 10 years, I typically tell people at this time, figure about a 6% rate. Rates are a little bit less than that, but I would say that on a qualifying rate. So it's very easy to come up with that. When you're doing your projections, you need those kind of figures.
Okay.
So as long as we have that, and you have a little bit of fallback, we're also looking at liquidity. So the more people have in liquidity, the better, if they have a little bit of fallback. So even if they did come up with that 20% down or 25 that we need, these other funds would also help as well.
I should add, too, that we help restaurants improve their loan package by not just raising capital, but by, they can then say, well, we have 200 people in the community who now have an interest in seeing us succeed. So we're finding it helps them in that less quantitative way as well.
Great information. So just if you're in your car listening and about to duck out and won't hear the rest of this show, remember you can catch it streaming online on the AM 920 website here in Atlanta, Georgia on WeSellRestaurants.com. You can also listen as a follow-up on our podcast that's available on the iTunes store, or catch us on our YouTube channel, which is YouTube/ of course, We Sell Restaurants. Feel free to tweet your questions to us at twitter.com/sellrestaurants. We're going to take a quick time out to recognize our sponsors of today's show, and we'll return with more news and information on financing a restaurant purchase in just a few moments. Remember, We Sell Restaurants operates the largest restaurant brokerage company in the nation that's based on the number of listings, transaction count, and volume. We are also franchising nationwide and have offices in Florida, Colorado, South Carolina, Tennessee, and Georgia. You can catch all the information as well as our recent writings on our blog at WeSellRestaurants.com. So stay tuned, and we'll return after this short commercial break for more information from the restaurant brokers. I'm Robin Gagnon.
I'm Eric Gagnon, and we are here with our guests, and hopefully all of our guests can stay here for another segment of our show, and we look forward to hear from you guys some more in